welcome to the 22nd episode of Tokenizing Everything, our weekly interview series with thought leaders in the blockchain industry. With me today is Stephan Arnold, blockchain lead at Helaba. We're talking about the role of banks in the token economy. Hey, Stephan, nice to have you here today. How are you?
Hello, Nicolas. Nice to be here. I'm happy to have this conversation now with you.
Perfect. Before we dive into it, I have to mention that all opinions today are solely personal and do not reflect the opinion of Amazing Blocks, Helaba, or any other involved parties. And specifically today are definitely not investment advice. So, Stephan, would you maybe just briefly start by introducing yourself, who you are, and what your current role is at Helaba?
Yes, I would really like to. My name is Stephan Arnold. I work at Helaba in the corporate development and digitalization department. I'm responsible for basically all the DLT topics. I work at Helaba now for a little bit more than 3 years. Before that, I started my career at Commerzbank. I was there for 7 years. And also in the digitalization department, developing client portals, and then moved into a more strategic role at Helaba.
Okay, very exciting. So you've experienced the banking sector in depth. So maybe could you give us some insights as to what actually interests you about this space, and why did you decide to join it?
The banking space or the blockchain space?
First of all, the banking space. After that, I'll get to the blockchain space for sure.
I think the banking space in general is like a really interesting space. The whole economy runs only with banks today. Well, maybe some people in the crypto space would say they would like to change that, but I would say you need credits to run companies, to develop products, to do payments and stuff like that. So that's something that really fascinates me, and it's a business model which has to be like, everything has to run stable. If you go to a shop and you cannot pay, and for example, it would be quite bad. So therefore, these are topics which are important in the everyday life, which just needs to function. And I think they're exciting products which can be built in the infrastructure, and therefore I enjoy working in that space.
Yeah, I can imagine there's a lot of diverse, applications and fields. Some people only see banks as a place where you just withdraw your money, but there's a lot of more behind it, right? So and I'm sure it's a very exciting sector, right, to work in. So maybe now going back to the question also that you referred to, what excites you about blockchain generally, and also maybe could you share some insights as to how did you actually enter this space? Because a lot of people always describe there was like a specific wow moment that really excited them and convinced them to go all in on blockchain.
Well, at Commerzbank, I was working in the digitalization department. We were basically developing client portals. When I changed over to Helaba, it was more like looking at it from a strategic picture, and they asked me if I'm interested to take over the DLT initiatives, to have a look at the DLT initiatives, and starting to look at it from a strategic perspective. What could a wholesale bank as Helaba do with DLT, with the technology? What's the potential of the technology? And that's how I got involved. It's not that I had like the big, maybe crypto moment with Bitcoin and started investing in the space. But it was basically just that somebody asked me if I wanted to take over the strategic part of this technology and have a look at it. And I thought it would be really interesting. And since the beginning of working at Helaba, I'm involved into the blockchain initiatives. And therefore, and it evolved quite quickly from pilots now to whole productive applications which are running there. You see the whole involvement in the market. The space is like quite crazy out there. So therefore, interesting times happening here.
Yeah, definitely. And I think really what has been a trend throughout the past months, and maybe year, is that really institutions are now entering this market where people would, initially had criticized banks and generally financial institutions to be too slow, but I think really now they're definitely picking up steam. So could you maybe give us an update on the current status quo as to how you would describe, how much or how far blockchain is in the banking sector in general?
Well, I believe that blockchain is still evolving. It's still quite a new technology. I know that it started like 12 years ago with Bitcoin, but since it entered like the corporate space, not much time has passed. And if you see the involvement of a lot of technologies, then you see you have like a phase of enthusiasm where you think it can solve everything, every problem which ever happened in the world could be solved with DLT. Where we know right now that's not the case, but and now we're in a phase, I think, of adoption, that we see companies getting out of piloting phase, like doing real transactions, platforms which are moving towards the market, getting adoptions, and you see quite a lot of stuff happening there. And also that regulators are now discussing worldwide the digital euro, digital money in general, CBDCs, is I think quite positive for the space, that you can see things are evolving, and all institutions, not only banks and regulators, are looking at this. And I think we will see in general with blockchain use cases a big adaptation, which goes even further the next years.
Yeah, definitely, very exciting space to be in, and also happy to see that established financial institutions are not shying away from this challenge of applying new technology, but actually also focusing on it and trying to implement it into their business models. So in Germany, Helaba is quite a household name, right? And I'm sure our German listeners will know about it. But from our podcast, we also have a lot of international listeners. Would you maybe just provide a brief intro of what Helaba is, what the main focus of the business is, and maybe just a high-level overview of your current endeavors there?
Yes. Well, Helaba is one of in Germany's so-called Landesbank or state bank. We are owned by the Sparkassen, the savings banks in Germany, and also by the state of Hessen and Thüringen. We are a wholesale bank as the core bank, which means we only have clients 250 in revenue and above. We serve a lot of real estate clients and do a lot of commercial real estate financing. So yes, and what most people don't know is like we are one of the biggest payment providers in Germany and in Europe, like processing last year's 7.6 billion transactions. So yes, that is like the core bank, but part of the like whole Helaba bank are also some smaller companies. Well, some banks such as the Frankfurter Sparkasse, or in short FRASPA, the people in Frankfurt will know it. Then we have the Frankfurter Bankgesellschaft, with this wealth management bank. Then we have also include the State Development Bank for the state of Hessen, the WI Bank, VE Bank in German. We have an asset manager, which is under the roof of Helaba, which is called Helaba Invest. And then we also have like a project development company, which is called OFB. And furthermore, one more company, which is like one of the biggest flat providers in Germany, which is called GWH. So it's a huge variety of companies under the roof of Helaba.
Okay, yeah. So, and I see, how difficult it could be to, especially in your role as blockchain lead, to implement this technology in all these different aspects. So, what I know is that you worked on for instance, the trade finance platform Marco Polo that's running on the Corda chain, also on another project called FinLedger, if I'm correct. And obviously there's other endeavors within Helaba in regards to applying blockchain technology, right? And maybe can you provide us some insights as to what the current projects are and how was the progress with these projects, such as the Marco Polo, one that I just mentioned, like just like a high level overview in regards to what is the status here within Helaba, and maybe also in terms of the future plans here?
Yes. Maybe regarding Marco Polo. Marco Polo, most people only see it as a trade finance platform, but basically it's trade and working capital finance. What's working capital finance? From a Helaba perspective, we are looking more at working capital finance, which means like buying receivables, supply chain finance, and moving forward with this topic. That means if you have, for example, you want to sell, somebody orders something from you and you want to sell this receivable, we as Helaba would buy it, and that also in a larger extent. We're looking at it right now, like our project is so far that we want to go into production, hopefully at the end of this year. We're testing the product right now, and we're also looking at the trade finance initiative. Marco Polo right now is quite developed. I think as a member banks, we have like, I believe 36 or 37 member banks, which are part of Marco Polo, looking at a trade finance, at the trade finance use case, and also on the working capital finance use case. I believe, let's say the trade finance use case is a use case with a lot of potentials. If you include like all the players on trade finance and you include them on the platform, you can make this process really efficient. And if you look at the trade finance space right now, it's a lot of the processes are still paper-based, are still running via fax machines, running via paper. So I think the whole process, that could help the whole process in general. What you have to look at the trade finance platforms, or in general at the blockchain space, is that you need to have interoperability in between platforms, because a trade finance platform will only work if you have your clients and they search for their importers, which they're sending their goods to, and they find them on the platform, and then it can arrange like a securitization of the goods and of the payments. So I think many platforms have to work together, because you have platforms in China, in Asia, you have platforms in the US. So therefore there need to be an interoperability, that these platforms can talk to each other, so you can really push them into market and make the space even more efficient. That's probably an advance that you have on the working capital side, that you also can agree on a smart contract on a peer-to-peer basis, and then just process the smart contract based on the data which is on the platform. So I believe on the Marco Polo side, there's a lot happening. Maybe internally, some people saw that we are also working on programmable money, programmable payments. Like Helaba was part of the working group of the Deutsche Bundesbank, which published a white paper at the end of last year. I think it was called Programmable Payments and Programmable Money and Applications, where we had a look at how you can use programmable payments, and how you can also interconnect maybe the current infrastructure in the payment system to the DLT space. So how can the DLT talk to the payment systems, make payments automatically, and also like move forward in the space that you say we have programmable payments, and then also having to look at the CBDCs and maybe stable coins in between.
Yeah, very interesting. And I think the topic of programmable money is really picking up steam as of lately, right? A lot of publications, a lot of, people that are trying to, push this topic, as obviously some jurisdictions like China, you may like it or not, but they're really doing a good job in terms of adopting this. And I think also with the upcoming Olympics and so on, they plan to integrate it. While other jurisdictions, like in Europe, they're moving slowly, at least from the institutional side. The private sector maybe a bit more ahead, but it's interesting to see that you guys are taking on a proactive stance here. So props to you guys at this stage. Maybe just a quick question from my side. Do you think programmable money in general will be more suitable for a private or a public chain? Because I know, since you have experience with both sides, maybe you can share some insights in that regard.
I think maybe to start there, we should differentiate in between programmable payments and programmable money. because how we also mentioned in the paper is that basically programmable payments, you have like the trigger outside the coin, outside the token, and that you say you trigger a payment and you say, well, you have if else then connect conditions, and then from there on you trigger a payment. And I think basically that's what most use cases are looking on. They have these conditions within the smart contract, and then they want to trigger a payment based on certain conditions. I think programmable money in general, if you say we're discussing it from if money has like an inherent logic, which could be quite difficult because you're also talking how do you connect like different tokens which have like maybe limitations within themselves, so that you say you have programmable money and you can only spend it for books or for your solar panel or whatsoever. Does it have like an exchange course towards a token which does not have any limitations at all? And it also might be in some use cases not feasible, that you say you have limitations, you have your wallet, and one part of the wallet you can only pay for books and the other part you can pay for whatever you want, might not be feasible in a supermarket, for example. So therefore, I think you have to look what do you need programmable money for, and what do you need programmable payments for? And that could happen in the payment system with stable, from a technology side, also with stable coins, or after all, maybe with a digital euro, if you trigger it from the outside, and if it will be able to trigger it from the outside. Okay. Maybe you asked regarding private coins, just to dig to private stable coins, to dig in there. I think one thing the whole banking industry has is that the people trust in the industry, they trust in the money, and that is something, and they trust that their data is protected. So therefore, if you would release like a stable coin from the whole banking industry, which is also like private, then it might be that people use it. But you also see that you see the whole DEM association working on stable coins. People might use it if they see benefits in there. If they see, well, I can transfer money to different countries would have a different currency, because that's what they mostly are talking about. They're talking about financial inclusion. They're talking about clients which maybe some banks don't even aim. So therefore, I think in the part of sending money to different countries and transacting with other continents, that it could be an interesting use case for them. And then also, it all depends on trust. It all depends on trust. And if you look at stable coins right now, if you look at USDT, which has some trust issues because you don't know how it was backed by fiat currencies, or if you look at other stable coins, you might see, do you have the trust? Will it be accepted by all companies? Will you be able to pay with that? And I think that's an important issue. That, like the adoption, if there's adoption for these stable coins, then it might be an issue. If there's no adoption or no trust, then the people won't use it, because you only use, for example, WhatsApp because most of your friends use WhatsApp and you can interact with them, and you don't use some messaging device where you cannot interact with somebody else.
Yeah, exactly. I think that's a good point. Everybody knows about the problems of WhatsApp, but is still using it, at least most people, because it's just the place where you can connect the most easiest way, probably, or where most people are actually using. So that's a great point from your side. And I think also, what you mentioned, there will be probably all these different, coins / tokens existing that will be interoperable with each other. And I think also basket tokens are quite interesting, right? Indexing different assets together and having like a stable value through this. So I think it's very exciting to see, where this whole industry is going in terms of, tokenizing all these different, assets and currencies. So at this stage, I would like to pose the Be in Crypto special question from their community, which we ask to our guests every week. And this week's question was, in regards to your case, what could banks possibly tokenize, and especially what is the most feasible use case for tokenization in regards from the perspective of a bank, so to say?
I think you always have to look at the perspective. What kind of bank is it, and how do they have benefits? I think we're looking at real estate tokenization, since we're a huge commercial real estate financing company. We're looking at where can benefits, where do we have benefits? How is the market reacting? And I think real estate is an interesting use case. You also have more other use cases. I think if you look at the whole alternative investment, where you say it's illiquid, it's currently, you cannot trade it, like for example art or old timers. That's like, from my personal opinion, I like old timers as use case, because I say that's something where also emotion gets in. You look at maybe an old SL, Mercedes SL, and think maybe to own a part of that would be great, and maybe to also have like a component where you can use it maybe once or twice a year, which could be an interesting use case. But I see, like, from a token perspective, that we say real estate is interesting, and then maybe also like tokenizing stocks someday. I think you have to look at the regulations. If the regulations permit that you can tokenize stocks, but you also have to have in mind that it needs to be a system which needs to be as effective as the system is of today. If you say, for example, if you tokenize stocks, for example, today, or if you tokenize some real estate, and you only have a primary platform where you issue the token, and you can only exchange on this platform, then it's quite difficult for adoption. I think you need like the secondary market where you really can trade the assets, and where you really can move forward, and where you can also settle like within a few minutes, within a few seconds, if possible, and then you might get the benefits out of there. And I think the market is moving towards it. I think you see the primary platforms, there are a lot of them on the market right now, which are doing tokenizations. I think a lot of people know the issue that there's no real secondary market. People call it, I don't know how it is in English, but they call it like the secondary market. Right now it looks like eBay Kleinanzeigen. So
yeah.
where you just post it somewhere and somebody can buy it if they agree on the price, and there's not like no real market maker. But I think the secondary market needs to evolve. And for us as a bank, like, we're looking clearly at typical products which are right now in our portfolio, which would be like stocks or real estate. And but we also might have a look on the site to see which could be of potential interest for our clients, to evaluate the value which it has for our clients, evaluate risks, because as a bank we always have, likely as a traditional bank such as we are, we have to evaluate the risks which we have, but also like propose something to our clients which could interest them. And this is what we are looking at right now, at the use cases, to see what provides the most value to our clients, what could diversify also our portfolio. And yeah, therefore we are looking at the whole token economy to see how it evolves. It's really interesting.
Yeah, that's a great answer. I was going to ask you about your favorite tokenization use case, but now we know it. It's classic cars, so very exciting. It's also one of the hottest use cases right in the tokenization sector right now. And I also fully agree with your aspect in regards to the secondary market, right? It's like a desert, at least currently in the security token space, I would say. If you look at the major platforms such as T0 or so on, I mean, the biggest projects on that, they basically have a 24-hour trading volume of between 5 to 10 or 15 even K, which is really nothing, right? And that kind of underlines the point that you made. So I think that this will probably be one of the biggest challenges that could also be something for banks to kind of, solve. So maybe at this stage, to the question, which role will banks inherit in the future of the token economy, as everything is going toward a, so to say, decentralized direction? someone had mentioned to me, the way that banks are, especially the Sparkassen, for instance, are structured is already kind of decentralized. So, maybe that, comes in handy for the banking sector, at least certain players in that space. But generally, where do you see that role? Is it, the custody part, or will there be, custody in terms of, self-custody that will be emerged? Is it cash on and off ramp? What is it to you that you think that banks will have, or which crucial role will they play in the future?
I think that there will be, let's start on that side. There will be still a role for banks. I think what I mentioned before is that trust is like a big issue, that you say you have to trust. Like if you want to have real adoption, then you need to trust in topics. And I think there are a lot of things people criticize on the current banking system, but a lot of things are working quite fine. If you have a problem, usually on the banking system, it gets solved. If you send something if you send your coins to the incorrect wallet, they're gone. You cannot have any reclamation and get your coins back. It's just not possible. Maybe if you send it on some kind of exchange and the other wallet is on an exchange, it's possible. If you send it to the wrong address, to the wrong account number, usually you have a possibility to get your money back. So therefore, I believe also on the role, let's say on the custody side, if you say as a private investor, I might trust like the startups with my money. I put maybe 10, 15,000 euros there in tokens, and they have a startup. But if you have like big corporates, they usually also have the security. If they put their money somewhere and have somebody hold custody of token and other maybe digital securities, for example, then they want to be secure that when they want to access their securities, they're still there. They always can access their securities. If they lose their private key, it's possible to recover that. So that's, I think, a very important issue on the custody side. And I think also like what banks can do is maybe help with the tokenization part, because it's often to decide whether you need debt, whether you need your own capital, and how you can design maybe a token. That could be a part which banks could also play a role. And as I said, for us on the payment side, like as one of the biggest payment providers, we can help process the payments. If you how to settle the payments. Also, if we're talking about securities delivery versus payment, you settle it on an instant payment side, you also be able to settle it within 10 to 20 seconds. So it's basically not from the definition delivery versus payment in real time, but it's like close to real time. So there will be different roles which banks can take part in. And I think we will see the market evolve, and also more and more banks getting into it.
Yeah, I think banks can really be kind of also a bridge, between, the blockchain space, the DeFi space, and people that, are not experts on that field as maybe we are, and that have no knowledge really how to utilize these tools, right? And banks can really be that intermediary, kind of continuing their role as the intermediary and also a safeguard, and then providing an intuitive user interface to leverage it. Because as we all know, it's quite difficult these days sometimes when you have 10 plus exchange accounts and 2 or 3 cold wallets, and then the non-custodial wallets, the warm wallets such as MetaMask and so on. So it's kind of very, I would say, fragmented space, or really hard to cope with all these different platforms where you have the tokens. And therefore maybe this could be a good role for banks to kind of step in, at least help people that do not want to deal with all this, maybe as the crypto nerds want to do. At this stage, maybe a brief question, since it's a hot topic these days, NFTs. Do you guys look into NFTs? Do you particularly think NFTs could be an interesting investment for your clients, or do you rather stay away from this?
Well, let's say we're a wholesale bank. So I think NFTs in some parts are, well, let's say an investment which could be interesting. And also, like, you see people nowadays investing in digital sneakers, or investing in like the painting of Beeple is probably the most famous NFT which went out there, and which is just like digitally. So I think you have to look at different industries. If you look, for example, at the gaming industry, like digital assets, which you have like trading swords in games, like are going on now for forever, like trading on eBay or whatsoever. So I think for the gaming industry, it's like quite an interesting use case. But if you're also looking like maybe on rights on music, rights on articles, books, or whatsoever, it could be an interesting use case regarding that. You also maybe on further, if they sell it further, or if you participate on certain kind of things, which could be interesting. I think right now you see a hype, like everybody's creating an NFT. You see a market which is currently quite unregulated. I think it will be regulated also soon. When you see a market is regulating, that's normally like part of the adoption, and it's also for the security of the clients. Let's say that's also they're investing in something which might be worth it. And let's say it's not the hot topic on the Helaba side, since we have the big clients and it's normally not their typical investment to invest in NFTs. But like from a personal perspective, I have a look at it to see how it evolves, and if we see that there might be a use case, like I said before, which is good for our clients, which does not have that much risk, we might have a look into it.
Yeah, very exciting. I think one thing you mentioned, the legal compliance of it is something that I find personally also quite challenging, because we're talking about sometimes intellectual property, and you cannot just issue randomly a token and say, okay, this is the IP of that asset, right? So it's quite a difficult topic, where I think, and this may be a bit biased, but the token container model developed in Liechtenstein could, for instance, be a good model to look at when in regards to having that compliance in place, especially for NFTs as well. But yeah, I guess we'll see how this will play out. So as we're coming to the end of the conversation, one thing I always ask my guests, and I know that you cannot give a definite answer to this, of course, but it's just always interesting to see the different perspectives and the different answers to this. So where do you see blockchain in general in 10 years from now?
Blockchain, or let's more likely talk about DLT, because I think you will see more use cases. You will see more adoption on token space. You will for sure see secondary markets. You will have more regulations in place, which might also allow it to easier trade on secondary markets. And I think we might be surprised. There might be some use cases we don't even think about yet, like the NFT use case. If you asked somebody 2 years ago, probably not a lot of people would have thought about this use case. But I think there will be, the whole industry will mature. You will see use cases. You will see a lot of productive applications, and maybe some more use cases moving towards a blockchain. And you will see also a lot cheaper technology than it is today. Right now, you see, like at the beginning it was like really, really expensive, and now the use cases are getting cheaper and cheaper as the technology evolves. And I think that is something which always happens, and I think that is something which will move forward. And I think it will be even a more likely a bigger ecosystem on the technology side, that you have a lot of use cases which evolve from there.
Yeah, so I think that was a great closing statement. As you mentioned correctly, I think blockchain, in order to really come to fruition, has to be more efficient and also cost effective. And hence, I think, we're definitely on the right path here, especially now with established institutions and experts like you joining the space, and also maybe making it mainstream step by step. So again, props to you for taking that active stance. And it was a great conversation, amazing insights, no pun intended. And yeah, I'm looking forward to seeing what's happening at Helaba and in regards to this. So pleasure to have you today, Stephan, and have a great weekend.
It was my pleasure. Have a great weekend.
Thank you. And to our listeners, to our live listeners, and to our watchers on YouTube, as always, it's a pleasure to have you, or to have you watch or listen to the episode. If you have any questions, I'm sure Stephan will be more than happy to answer. So feel free to reach out to him. If you have questions in regards to amazing blocks or tokenization, as always, feel free to reach out to me. And otherwise, I would say see you guys next week. And yeah, have a great weekend.